Hello again. Here we are on Chapter 7, Problem 19. I do have this template I loaded onto Brightspace. Hopefully, you guys took advantage of me doing that and looked this over, and even tried to do some of it, on your own before we go over it. This right here is the problem that they have in the book. And then here are all of the beginning balances. So I've already gone through and posted the beginning balances for all the accounts. So um, we'll do the journal entries, and then we're going to post those journal entries to the T accounts, the general ledger, and then calculate their ending balance. And then we're going to do the financial statements. Well, the closing entries and then the financial statement. Okay, so let's get started here with the general journal entries. I think I might break this up into three sections: the journal entries, the posting, and then the um, financial statements. Okay, so gross employee wages of 57.6, including the employer's share of Social Security taxes amounting to 4,100. Federal income tax and Social Security taxes withheld from that amount totaled 18,725. So remember, we're doing a proprietary fund now. A proprietary fund operates just like a normal business does on the accrual basis. It's not modified accrual like we've been wrestling with this semester. Okay, so what are we going to do? We're going to um, debit wage expense. How much is that going to be? Well, if we take the 57.6 and subtract out the 4,100 that was included in that number, we end up with 53.5. And then we're going to have payroll tax expense. That was 4,100, right? Gives it to us. And then we're going to have cash and do, and due to federal government. Okay, how do we figure out how much is what? Well, I would say how much is due to the federal government. We're going to come up with 22,825. And how did we get that number? The 18,725 and the 4,100. That's how much is due to the federal government. Federal withholding, Social Security, Medicare, all those, okay? And then we can back into the cash. So it's going to be 34,775. All right. Don't be intimidated by these entries, okay? They are, this is an upper level course, so do your best to try to remember the accounts and that type of stuff. Because you never know. Maybe one of these days I'll give you a quiz or an exam and won't enable the drop down menu. And then you'll have to know the journal entries. Okay, so office expenses $3,700 were paid in cash. Okay, and this one's an easy one because they tell us 3,700, right? Materials and supplies purchased on account during the year were 8,400. So we're going to have materials and supplies inventory. And it says that we purchased them on account. Okay, purchased on account. What does that mean? It means we didn't pay them yet, right? We owe them. So that's going to go into accounts payable. Whoops. I'm not having very good luck with computers today, so. And they said 8,400. Okay. I know I'm going kind of fast through these, but you know, these should be easy for you at this point because these are basically accounting 201 journal entries for the most part. So number 4, a bill totaling $14,525 was received for utilities provided by Washington City's utility fund. All right, so we're going to hit utility expense. And due to other funds, right? Because we owe that to the utility fund. So this is 14,525. Okay. The good thing about this being recorded, though, is you can go back through it over and over, and you can pause it and all that fun stuff. Which, if we were in an actual classroom, you wouldn't be able to pause me, even though you would probably want to most of the time. Number 5, cash paid to the federal government for payroll taxes was $23,000. So we're gonna hit due to federal government, and we paid them, right? So we paid them with cash, and that was for $23,000. Cash paid to the utility fund was $14,500. So we're going to hit the due to other funds. If you remember, we put that in there when we got the bill from the utility fund. So due to, and we paid them, so that's going to hit cash, right? And that was for $14,500. And then number 7, accounts payable at year end totaled 2,950. So we have to figure out how much is in there. So if we look at our beginning balance for that, our beginning balance is $2,550. That's that right there. So if we take the beginning balance. Actually, you know, why don't we do it like this? So the beginning balance was, what did I say? It was 2550, and then we're going to add the current year to the current year's activity, which, if you remember, up in journal entry number 3, we hit accounts payable for 8,400. And then what we're going to do is deduct our ending and then we subtract our ending balance of 2950, and they give us that number right here. So 2950, actually, we're going to deduct the ending balance. So now if we total those, we're going to get beginning balance plus the current year activity minus our ending balance, and that gives us the adjusting entry of $8,000. Okay, this should not be new to you. Okay, like I said, this is accounting 201, doing adjusting entries. So we're going to debit accounts payable, and cash will be credited because we paid the accounts payable with cash, and that is our adjusting entry, which is okay, so let's go on down to materials and supplies during the year, 8,250. So it tells us materials and supplies were used, so we can use that 8,250 because that's what they use. We don't have to do any calculations here. You know, we got the answer from the best place that we can get it. It's given to us, right? But what accounts are we going to hit now? We're going to hit cost of materials and supplies used, and credit materials and supplies inventory. Okay, and all we're doing is adjusting that to the correct amount that it should be. Okay. So charges departments during the fiscal year were as follows. So the general fund owes the IT fund $57,500. Special revenue fund owes them $2,600. So we're going to hit due from Okay, so you can think of that as like an accounts receivable. It's due from other funds. Okay. And then we're going to have billings to departments. And all we're going to do is add those two together, the 57,500 and the 2,600, and we get 78,1. And unpaid balances at year end were general fund 3,500, special revenue fund 1,800. So unpaid balances at year end were 3,500 and 1,800. We're going to calculate that basically the same way we did here. Okay, so I'm going to bring that down. Bring it down to here. So our beginning balance we would get from the beginning trial balance. So our beginning balance was 4,250. Our current year activity, if you look up under the 78.1, entry 9, which we hit due from other funds for 78,100, and then we're going to deduct our ending balance, which it tells us is the total of those. All right, so we're going to take the 3,500 plus the 1,800, and our adjustment is 77,050. So that means that they paid us that amount during the year because they went from unpaid to paid. Okay, and then depreciation for the year was 6,100. Again, no thought required because they give us the amount, and we know we're always going to hit depreciation expense. And then the allowance for depreciation. Okay. I think I'm going to end it there because we can't do the close. We're going to do the closing entries last after we do the financial statements and everything. Okay, because if we close them out beforehand, we're not going to have any revenues or expenses. Okay, so I'm going to stop right here, and then in the second video, we will take these amounts and post them to the general ledger, and then we'll calculate the ending balances, and then we'll do the financial statements. Okay, and if you have any questions, don't be afraid to reach out to me. However, text, email, whatever. Okay. All right. See ya in the next one.